Hello friends, welcome back to the channel. Today's trading psychology topic is taken from the legendary Dr. Alexander Elder, where we'll be discussing his key psychological strategies for becoming a successful trader. In this video, we'll explore powerful tools like how to create a solid trading plan, the importance of using stops and profit targets, and Elder's famous 2% and 6% rules to protect your capital. We'll also dive into his triple screen trading system, a method designed to help you think strategically and avoid emotional decisions. These strategies are essential for not just improving your trading skills, but also strengthening your mental game. It's about creating discipline, managing emotions, and making smarter, more confident decisions. If you find this video helpful, don't forget to like, share, and subscribe for more amazing content to help you become a better trader. Let's get started. 1. The 3 M's, mind, method, money. In the world of trading, strategies come and go. Indicators flash signals, charts tell stories, and markets move in patterns that seem familiar, until they suddenly don't. But at the heart of all consistent trading success lies a trio that Dr. Alexander Elder famously distilled into one timeless concept, the 3 M's, mind, method, and money. Let's dive into each one. Because together, they don't just shape your trading, they shape your future in the markets. Mind, the foundation of all trading success. Dr. Elder begins with what he believes is the most critical pillar of the 3, the mind, your psychology. He doesn't sugarcoat it. Most traders fail not because they didn't know what a moving average crossover was, but because they couldn't manage what was happening inside their own heads. Fear, greed, hope, and ego. These 4 emotional forces are like storms that batter every trader, and unless you learn to weather them, even the best system in the world will let you down. Elder, a trained psychiatrist, explains that many traders unconsciously bring unresolved emotional baggage to the trading desk. One day, it's the desperate need to win. The next, it's the crushing fear of losing again. And in both cases, it leads to impulsive, irrational decisions. He emphasizes that the key to developing a trader's mindset is emotional discipline, not eliminating emotions, but recognizing them and responding with control. You don't fight fear by pretending it's not there. You face it, understand it, and learn not to let it hijack your decisions. He shares this truth. No trading method, no matter how sophisticated, can save a trader from himself. That's why the mind comes first. Until you can detach your self-worth from each trade's outcome, until you can take a loss without losing your cool, you are not yet ready for the markets. Method, your trading system, but not your salvation. Once your mind is in the right place, Elder shifts the focus to the second M, method. This is your trading strategy, how you read the market, what indicators you trust, what setups you trade. Elder doesn't dictate a one-size-fits-all system. Instead, he emphasizes the importance of developing a logical, consistent, and testable approach that aligns with your personality and risk tolerance. His own method includes tools like trend-following indicators, oscillators, and the triple screen trading system, a technique that filters trades through multiple timeframes to increase their reliability. But more important than any specific indicator is the trader's ability to follow the rules they set. He warns against system hopping, jumping from one method to another every time a trade fails. Instead, Elder urges traders to develop a set of rules they trust, test them over time, and stick with them even through rough patches. But again, he reminds us, the best system is useless in the hands of an emotionally unstable trader. That's why method is the second M, not the first. Money, the shield that protects your capital. Finally, we arrive at the third M, money. Or more precisely, money management. Dr. Elder is clear, risk management is not optional. It is essential. He compares trading without money management to playing Russian roulette with your portfolio. Even a great trader will face losing streaks. That's a statistical certainty. But what separates winners from losers is how they manage those losses. Elder recommends never risking more than a small percentage of your capital on a single trade, usually between 1 to 2%. That way, a bad trade won't wipe you out, and you'll still be in the game when opportunity strikes again. He also speaks about position sizing, stop-loss placement, and the psychological benefit of staying small. When your position is too large, fear takes over. When it's sized right, you can remain objective. Risk control, in Elder's view, is what allows you to survive long enough to thrive. Elder insists that these three M's are not interchangeable. The order matters. You start with the mind, then build your method, and only then apply money management. Miss the first step and the rest will crumble. In his words, amateurs focus on how to enter trades. Professionals focus on how to manage themselves and their risk. That's the Elder difference. That's the heart of lasting trading success. Emotional discipline, the inner war. Every trader must win. Imagine stepping into the market with a solid trading plan. Your charts are set, your strategy is tested, and your targets are clear. But then something changes. Not in the market, but in you. Your hand hesitates, your heart races, you cut a winning trade too soon, or worse, you cling to a losing one, hoping for a miracle. Sound familiar? Dr. Alexander Elder, with his unique perspective as both a trader and a psychiatrist, calls this what it is: self-sabotage. And emotional discipline, he argues, is the only antidote. Avoiding self-sabotage, the trading trap we set for ourselves. Elder doesn't mince words. Most traders fail not because the market beats them, but because they beat themselves. They fall into emotional traps, behaving irrationally in high-stakes moments. For example, holding on to losing positions for far too long, refusing to accept a loss, praying it will turn around. Or the opposite, selling a winning trade far too early, afraid that gains might slip away. He draws a powerful and humbling comparison. Trading errors are like addictive behavior. Just like alcoholics, losing traders often know what they're doing is harmful, but they do it anyway. They rationalize, they repeat the cycle, and they suffer the consequences. Elder suggests that the path to healing begins with awareness. Just like the first step in recovery is admitting there's a problem, the first step in trading discipline is acknowledging that you are capable of sabotaging your own success. Once you accept that, you can begin to change it. He even parallels the structure of Alcoholics Anonymous, encouraging traders to create rules, routines, and accountability systems that keep emotions in check. This isn't just a clever metaphor. It's a roadmap to rebuild your relationship with the market and yourself. Fear and greed, the twin forces that hijack your mind. Two emotions dominate every trading day: fear and greed. Fear can be paralyzing. It keeps you from entering trades, even when your system tells you to. It makes you move stop losses tighter just to feel safe. It whispers, "What if this one fails too?" And in that moment, the fear of loss drowns out logic. On the flip side, greed seduces you into overtrading. It pushes you to ignore risk. It tells you that you found the golden goose and you should bet big, just this once. But that just once is often what brings an account to its knees. Elder doesn't tell traders to eliminate fear and greed. That would be impossible. Instead, he teaches them to recognize these emotions when they arise, and then to choose not to act on them impulsively. And how do you do that? By sticking to predefined rules. Rules written before emotion enters the room. When the market is calm and your mind is clear, that's when your trading plan is created. And in the heat of the moment, your job is to follow it, not your feelings. This kind of self-discipline isn't natural. It takes training. But it's what separates seasoned professionals from the emotional amateurs. Fantasy versus reality, the dangerous illusion of easy money. One of the most damaging emotional traps, according to Elder, is fantasy, the dream that trading is an easy road to riches. Many new traders are drawn in by this illusion. They see screenshots of profits, fast cars, and freedom. They think, "I can do that too." But Elder sets the record straight. Trading is intellectually simple, but emotionally brutal. It's not about memorizing charts or mastering indicators. It's about mastering yourself. He warns against the delusion that trading is quick money. That fantasy only leads to reckless decisions, oversized positions, and shattered expectations. The reality is that success in trading demands hard work, discipline, and emotional endurance. Just like any profession, whether it's medicine, engineering, or sports, trading requires years of learning and thousands of hours of experience. The faster a trader accepts that truth, the quicker they can begin to grow. Emotional discipline is a skill, and it can be learned. Elder leaves traders with hope. He believes that emotional discipline is not a gift. It's a learnable skill, but it must be trained like a muscle. He encourages journaling, writing down what you felt during each trade. He advises setting rules and sticking to them, even when every bone in your body wants to break them. He promotes self-reflection, routine, and a sense of personal responsibility for every trade taken. Because, in the end, charts don't make decisions. You do. Dr. Elder's message is clear. If you want to win in the markets, start by winning the battle within. Master your emotions, and you unlock the most powerful edge a trader can have, not a secret indicator, but emotional discipline. 3. Mass psychology and market behavior. The crowd never thinks, it reacts. The market is more than numbers on a screen. Behind every candlestick, every spike, every collapse, there's emotion. There's fear, there's greed, and at the center of it all, there's the crowd. Dr. Alexander Elder reminds us of a powerful truth. The market is a living, breathing organism made up of people, millions of people, who act together, often irrationally. If you want to be a consistently successful trader, you must understand this. The market is psychology in motion. The market, a mirror of human emotion. At its core, Elder says, the market is a place of consensus. The current price of any stock or asset represents an agreement, a momentary truce between buyers, sellers, and the undecided. But here's the twist. That consensus is fragile. It can shift in seconds. Because people aren't machines, they're emotional creatures. They react to news, to rumors, to charts, to each other. And when emotions flare, prices move. Elder encourages traders to see price not as some magical number, but as the expression of collective psychology. When buyers feel confident, prices rise. When fear creeps in, prices fall. Understanding this emotional undercurrent, reading the crowd's mood, can give a trader a powerful edge. Trading against the crowd, the art of thinking independently. Now, here comes one of Elder's boldest and most important principles. You cannot succeed by following the crowd. The crowd is emotional. The crowd chases trends, buys at the top, sells at the bottom. The crowd panics, and if you blindly follow them, you will too. Elder teaches traders to respect the crowd's power, but not to fear it. The crowd can move markets, yes, but its behavior is often predictable and repetitive. Just like a child touching a hot stove again and again, the market crowd keeps making the same emotional mistakes. If you can spot those patterns, you can trade against them and win. But to do that, you must be emotionally and mentally prepared to stand alone. You must have the strength to buy when others are afraid and to sell when everyone else is shouting, "To the moon." That kind of contrarian thinking isn't easy. It feels unnatural. But Elder says that's exactly what separates great traders from average ones, the ability to think independently, even when everyone else is swept up in euphoria or despair. Price oscillations, the pendulum of emotion. Elder offers a beautiful metaphor here. He likens market prices to a pendulum. Think about that image for a moment. The pendulum swings back and forth, from one extreme to the other. At one end is panic, at the other, euphoria. But the center? That's where true value lives. Prices rarely stay centered for long. Instead, they swing, driven by crowd emotion, too high or too low. And that's where opportunity lives. When the pendulum swings too far into fear, people sell blindly. That's when Elder suggests it may be time to buy. When it swings into greed and everyone is drunk on profits, it may be time to step back or sell. This rhythm of emotion, this back and forth, isn't just noise. It's a pattern. And Elder's counter-trend trading approach is built around it. He trains his eyes not on where the crowd is now, but on where they'll likely swing next. It's not about catching exact tops or bottoms. It's about understanding that extremes always correct. What goes up too fast comes down. What crashes in fear often rebounds. And when you learn to read those emotional swings, you don't chase the crowd, you anticipate it. Trading with awareness, not impulse. Your job as a trader is to observe, not absorb, the market's emotions. Don't get swept up in the crowd's excitement. Don't share their fear. Watch it, study it, use it. He teaches that the best traders are like psychologists with a price chart in hand. They don't just look at indicators, they look at what those indicators reflect about crowd behavior. Are people panicking and selling everything? That might mean a bottom is near. Are they euphoric, throwing money into anything that moves? That could signal a top. Elder's philosophy of mass psychology is both a warning and an opportunity. Warning, because the crowd is dangerous. It reacts emotionally, irrationally, and destructively. Opportunity, because its behavior is not random. It follows patterns. And if you can stay calm while others lose their heads, you can use those patterns to your advantage. Dr. Elder doesn't ask traders to be robots. He asks them to be aware, to learn how the crowd moves, and to be brave enough to go the other way when it matters most. That's the true power of emotional mastery in the market. That's the art of trading with and against the crowd. 4. Record keeping and self-reflection, the invisible edge of great traders. In trading, most people chase the flash, the hottest stocks, the perfect setup, the secret indicator. But Dr. Alexander Elder teaches that the true edge doesn't come from something flashy. It comes from something quiet, disciplinary, and often overlooked: record keeping and self-reflection. Elder goes so far as to call it the fourth pillar of trading, right alongside mind, method, and money. And without it, he warns, even the best strategies eventually collapse. The trading diary, your mirror in the market. Let's face it, trading is not just about what happens on the chart. It's about what's happening inside you when you take that trade. That's why Elder insists every trader should keep a trading diary, a living document that captures your decisions, your emotions, and your reasoning. Think about it like this. Every trade is a test, but if you don't write down your answers, how will you ever learn from your mistakes or even know what you're doing right? Elder advises traders to document everything. Why did you enter the trade? What was the signal? What was your goal? How were you feeling? Confident? Nervous? Rushed? What happened after? Did you follow your rules? Or did emotions interfere? When you begin to track not just your trades, but your thinking and emotional state, something powerful happens. You start to see your own patterns. You notice when you act out of fear, or when you ignore your plan in a rush of greed. And once you become aware of these behaviors, you can begin to correct them. Show me a trader with good records. Elder doesn't just recommend keeping records. He builds an entire philosophy around it. One of his most striking statements is, "Show me a trader with good records, and I'll show you a good trader." Why such strong words? Because good records show that a trader takes their craft seriously, that they're not just gambling, that they're thinking, learning, and improving. A trading diary isn't about perfection. It's about accountability. When you document your process, you're forced to face your own behavior. You can't blame the market. You can't chalk it up to bad luck. You have to own your choices. Taking full responsibility, the hallmark of a professional. Self-reflection, Elder teaches, isn't just about journaling. It's about radical self-honesty. The market doesn't reward excuses. It doesn't care about your intentions. It cares about your execution. If you lose, the reflex might be to say, "The news ruined my trade," or "I just got unlucky." But Elder challenges traders to look deeper. Was your position sized correctly? Did you follow your rules? Did fear, greed, or boredom push you off course? By taking 100% responsibility for the outcome, win or lose, you take your power back. You become a participant, not a victim. And when you do this consistently, you don't just become a better trader. You become a more aware, more grounded, more resilient person. The path to continuous growth. Here's the real beauty of Elder's record-keeping philosophy. It transforms trading from a series of random events into a structured learning process. When you keep good records, you can go back, weeks, months, even years, and see how far you've come. You can revisit your biggest mistakes and recognize how much more control you have now. You can pinpoint the moments when your discipline broke and prevent those moments from repeating. More importantly, you start building a database of self-knowledge, not just about the market, but about you, your strengths, your blind spots, your emotional triggers. This is how amateur traders become professionals, not by guessing better, but by reflecting deeper. Your trading journal is your best teacher. Dr. Elder doesn't promise that keeping a trading journal will instantly make you profitable, but he promises this: it will accelerate your learning curve like nothing else. It will show you truths no mentor or indicator ever could, because it's based on your real trades, your real emotions, your real growth. So ask yourself, are you willing to write down your thoughts before every trade? Are you ready to confront your habits after every session? Because that one quiet step, recording and reflecting, could become the loudest turning point in your trading journey. 5. Psychological challenges and solutions. Winning the inner game of trading. Trading at first glance looks like a game of charts and numbers. But Dr. Alexander Elder makes it clear, it's not just about indicators or setups. The real battle is internal. The toughest opponent? It's you. Elder explores the core psychological challenges that destroy most traders and provides practical, heartfelt solutions to overcome them. Because if you can't manage your own mind, no strategy in the world will save you. Fear of placing orders, the freeze before the fight. Let's start with something many traders won't admit out loud, the fear of pulling the trigger. Elder says it plainly. Many traders hesitate to place trades, even when all signals are aligned. They freeze. Why? Because placing an order means stepping into the unknown. It means putting real money and ego on the line. What if you're wrong? This fear, Elder explains, is not irrational. It's natural. But letting it control you will paralyze your progress. The solution isn't brute force. It's confidence built through preparation. That's why he recommends backtesting. When you see that your strategy works over hundreds of past trades, your brain starts trusting it. Starting small. Trade with position sizes so small, you can afford to lose them without emotional pain. That's how you train yourself to act without fear. The goal isn't to eliminate fear. The goal is to act despite it, because your system gives you confidence and your risk is controlled. Overconfidence after wins, the hidden danger of success. Now flip the coin. You win a few trades. You're flying high. You start to feel unstoppable. And then you make a reckless trade. You break your rules. You size up too big, and boom, you lose not just money, but clarity. Elder warns that overconfidence is just as deadly as fear. In fact, it often feels worse because it comes wrapped in the illusion of control. This happens most to beginners. They think a winning streak means they've figured it out. But Elder teaches that trading is probabilistic. A few wins don't mean you're a genius. They just mean variance is smiling on you, for now. The solution? Humility. Elder urges traders to celebrate wins quietly. Stay loyal to the process, not the outcome. Avoid raising stakes just because you're on a roll. Discipline must remain constant, whether you've just lost 5 in a row or won 5 in a row. That's the sign of a true professional. The losing mentality, emotional traps that keep you stuck. Here's a tough pill to swallow. Elder says many traders don't just lose trades, they live with a loser's mindset. What does that look like? Doubling down on losers, hoping they'll reverse, cutting winners early, just to cover the red, holding on to losing trades with the fantasy, it'll come back. These behaviors aren't logical. They're emotional traps, rooted in fear, denial, and ego, and they compound losses faster than any bad setup ever could. Elder's advice? Get ruthless with bad habits. Cut losers quickly. Your first loss is often your smallest. Let winners breathe. Have a strategy to trail them, not kill them. Never rescue a loser by sacrificing a winner. You're just reinforcing bad behavior. And above all, stop trying to be right. Start trying to trade right. Ego is expensive in the markets. Discipline is profitable. Self-awareness is the key to mastery. Elder circles all of this back to one big truth. Self-awareness is your greatest asset as a trader. If you don't understand your own triggers, your fears, your emotional cycles, your thinking errors, you're trading blind. The market doesn't just expose weaknesses, it punishes them. But when you start to notice your own behavior, without judgment, just awareness, you begin to take control. You can pause, reflect, adjust. That's where real transformation begins. It's not about never making emotional decisions. It's about recognizing them fast and learning from them. The good news? You can train your mind, just like you train your strategy. And the more honest you are about your emotional challenges, the stronger and calmer you become. Because in the end, success doesn't go to the smartest or the fastest. It goes to the one who can keep their cool, stay aware, and stick to the plan when the pressure is highest. 6. Long-term perspective. trading as a marathon, not a sprint. If there's one message Dr. Alexander Elder emphasizes again and again, it's this: trading is not a quick money game. It's a profession, a craft, and a lifelong journey. In his words, the best traders don't chase profits, they chase excellence, because when you trade well, the money eventually follows. But that takes perspective, a long-term one. Short-term greed versus long-term mastery. Too many traders come into the market with the wrong mindset. They think of trading like a slot machine: put in a few bucks, pull the lever, and hope for a jackpot. Elder calls this a dangerous illusion because markets aren't casinos. They're battlegrounds of discipline and psychology. New traders often get trapped in short-term thinking. How much can I make this week? If I just hit one big trade, I'll recover all my losses. Let me double this account fast and walk away. This mindset leads to overtrading, oversized positions, and emotional chaos. It may produce lucky wins, but almost always ends in long-term losses. Elder urges a different question: how can I become a consistently good trader? Because consistent quality, not flashes of luck, is what builds lasting success. Think like a marathon runner. Elder compares successful traders to marathon runners, not sprinters. Sprinters burn fast and fade early, but marathoners pace themselves, conserve energy, and stay focused on the long road ahead. The same applies to trading. You don't have to win every day. You don't have to catch every move. What matters is that you're still standing, still learning, and still growing, year after year. This mindset shift changes everything. You stop overreacting to losses. You stop chasing every new fad or strategy. You start measuring success in terms of discipline, not just dollars. Because over time, consistent execution outperforms reckless ambition. Trade well first, the profits will follow. One of Elder's most powerful principles is deceptively simple. Don't focus on making money. Focus on trading well. When you chase money, your decisions get clouded by emotion. You take trades you shouldn't. You move stops. You gamble. But when your focus is on quality execution, following your rules, managing risk, and learning from mistakes, you start building something real, something sustainable. It's like a good athlete. They don't aim to break records every time. They aim to perform their best. The wins come as a result of consistent training and mindset. Continuous learning, the lifelong student. In Elder's world, the best traders never stop learning. The market is always evolving. New instruments, new patterns, new behaviors. If you think you've mastered it, that's the moment the market will humble you. Elder recommends making study a daily habit. Read market books and trading psychology insights. Backtest your systems regularly. Watch the charts, not just to trade, but to understand behavior. Journal your thoughts, trades, and emotions. He also encourages listening to experts, but with a critical mind. Don't follow anyone blindly. Evaluate what works for your personality, your system, your goals. Take wisdom from others, but filter it through your own experience. Longevity comes from structure and self-awareness. Here's the truth. Most traders don't fail because of lack of knowledge. They fail because they burn out. They blow up accounts. They emotionally exhaust themselves from chasing quick wins and shortcuts. Elder shows a better way. He teaches you to build a structured process, a method that suits your style, a money management plan that protects you, a psychological toolkit that keeps you grounded. And you repeat that process with calm, focus, and curiosity, day in, day out. That's how you survive the dips. That's how you grow through the plateaus. That's how you turn this craft into a career. Dr. Elder's long-term perspective is more than just advice. It's a philosophy, a call to treat trading not as a quick hustle, but as a discipline worth mastering. If you can slow down, stay curious, and trade with patience, you'll find something far better than a lucky streak. You'll build a foundation that lasts, a mindset that withstands pressure, and a career that doesn't just make money, but makes meaning. 7. Key psychological strategy. Trading is 80% psychology and 20% method. Dr. Alexander Elder doesn't just teach this, he lives it. In this section, we explore core psychological tools Elder recommends to every trader serious about long-term success. Tools that bring structure, reduce emotional interference, and protect your capital from your own impulses. 1. Develop a trading plan, your psychological shield. Let's begin with the foundation, a written trading plan. According to Elder, trading without a clear plan is like sailing without a compass. You'll be tossed around by waves of greed, fear, and impulse. A trading plan, one you've written down, gives you a calm center when the market gets stormy. This plan should answer key questions. What setups will you trade? When will you enter? How will you manage the trade? When will you exit, win or lose? The magic here is not just in having rules, it's in having them before the trade begins, when your mind is clear and rational. During a trade, your emotions are loud, but your plan, that's your quiet, logical guide. 2. Use stops and profit targets. Discipline in action. You've heard it before, but Elder makes it non-negotiable. Always use stop-loss orders. Why? Because stop-losses aren't just financial tools, they're emotional safety nets. They free you from second-guessing, from hoping and praying, from watching a losing trade spiral out of control. Stops define your risk up front, so you can accept it and move forward with a calm mind. Equally important are profit targets, because greed can be just as dangerous as fear. Set a realistic exit point for gains. Let it be part of your plan. And most importantly, stick to it. This disciplined structure prevents your emotions from hijacking your decisions mid-trade. The 2% 6% rules, emotional survival tactics. Dr. Elder's 2% and 6% rules are psychological armor disguised as risk management. 2% rule, never risk more than 2% of your total account equity on a single trade. 6% rule, if your total losses for the month hit 6%, stop trading for the rest of the month. Why does this matter? Because trading isn't just about surviving bad trades, it's about surviving bad streaks. Everyone has them. But emotional traders, blinded by revenge or desperation, blow up accounts trying to recover too fast. Elder's rules keep your losses small, your emotions contained, and your focus intact. They allow you to pause, reset, and return with clarity, not chaos. Triple screen trading system, psychology meets strategy. One of Elder's most famous contributions is his triple screen trading system. While it sounds like a technical setup, and it is, its true power lies in its psychological impact. Here's how it works. Use a higher time frame, like weekly, to define the overall trend. Use a middle time frame, daily, to look for a setup in that trend's direction. Use a lower time frame, hourly, to time your entry. This multi-time frame approach forces you to pause, cross-check, and think strategically, reducing emotional impulsivity. It also filters out noise, helps avoid false signals, and aligns your trades with higher probability trends. That's not just smarter trading, it's emotionally safer trading. Avoid guru traps. Be your own expert. Perhaps one of Elder's most grounded pieces of advice is, beware the gurus. He cautions traders, especially beginners, against blindly following so-called market experts who often make more money selling courses than trading. One striking example he shares is his deep dive into WD Gann, a legendary trader many hold in high regard. Elder interviewed Gann's own son, who revealed that Gann wasn't the market wizard people believed. He barely made any money trading. The lesson? Don't worship anyone. Be a skeptic. Study what works. Test it. Trust your own analysis over charisma or hype. The market doesn't care who your guru is. It only responds to discipline and logic. Your trading plan protects you from chaos. Your stops and targets protect you from second guessing. The 2% and 6% rules protect you from disaster. The triple screen system protects you from impulsive entries. And avoiding guru traps protects you from false hope. Together, they form a psychological fortress, allowing you to trade with confidence, clarity, and control. Because in the end, success doesn't belong to the most talented. It belongs to those who can stay calm, stay focused, and stay in the game. And that's a wrap for today's video, friends. We've covered some powerful psychological strategies from Dr. Alexander Elder that can truly transform the way you approach trading. If you found these insights helpful, don't forget to hit the like button. Share this video with your fellow traders, and subscribe to the channel for more trading tips, psychology hacks, and strategies to help you stay on top of your game. Thanks for watching, and I'll see you in the next one.